Welcome to Visa. With every swipe, they make some money. Yes, Visa Incorporated. Is this the stock that you should buy and hold on forever? It potentially is one of those stocks that just keeps on going up and up and up. But as you've noticed lately, around the traps, that you're starting to pay extra for those Visa payments now, as it's been put on by the people when you go to buy your groceries, not necessarily groceries, but when you go to buy in many shops, they give you an extra fee on top. So that's more money for them and less money for you as a consumer. So yes, Visa is making a lot of money, and so are their merchants behind it. Well, let's have a look here. We're here to do a stock analysis on Visa, see where the money's going. Are we really getting a good revenue going up for Visa? Nice, simple company. Is it the one to hold? And if you don't know about Visa, it's pretty much the number one leader in processing online debit cards, credit cards. Pretty much, if you want to go swipe your card anywhere in the world, Visa is pretty much accepted virtually everywhere. So where this exists. So we're going to do a deep dive stock analysis on Visa. We're going to look at all the financials from revenue, net profit, return on invested capital, where it's been over the last 5 years, total assets, long-term debt, everything in between. And if you stay right to the end of the video, as always, I will give you the intrinsic value of this company. Yes, welcome to my listeners that have been loyal for a long time, and the ones that are starting, welcome. If this is your first time, welcome to the channel. We will be doing videos like this every single week, 3 days a week. Let's get to it. Visa deep dive stock analysis. Welcome, guys and gals, back to the channel. Yes, Visa. Is this the company that you need to buy and hold forever? Let's look at it from a financial perspective. Revenue, 29 billion in 2022, jumped up to 32 billion in 2023, so that's a very good start. Nothing mind-blowing, but nice, steady improvement. Net profit, 14.9 billion, up to 17.2 billion, so just about over half of what they make goes into their pockets. Is unbelievable. Very good there. Earnings per share at 9.92, so very good there, very good. You can't complain about that one. PE ratio 27.95, so there's still a bit of growth. But they believe there's still a bit of growth in there in the price at the moment. If you believe in that, stay around for the intrinsic value. We'll see if that is the case, or is it overvalued for a company that maybe not going to the moon in terms of money. Dividend yield, a very weak 0.75%, so not even 1% dividend yield for $2.08 each year for every share you got for the next 12 months till they more than likely put the dividend up. In terms of short interest, it's 1.9%, so that's actually more than I would have thought. So some people are thinking there might be some sort of miracle that this company collapses. But at 556 billion, it does not look likely. Doesn't mean it's not possible, but 5.56 billion, they're halfway to $1 trillion, folks. Total assets have gone up as well from 90 billion to 91, so a slight increase. And total liabilities have virtually stayed the same at 51 billion over the last year. And similar with long-term debt at about 20.7 billion. Free cash flow has jumped up a little bit from 7.8 billion to 19.6, so that's what you like to see. 2 billion shares outstanding. They've been good to you, but there has been a little bit ups and downs along the way, so they're not a smooth sailing giving you buybacks, but they have sort of bounced back the last year at least to give you buybacks. Return on invested capital at nice 26%, so they know what they're doing. And investing your $1 and making it $1.26. So that's the basic way they calculate that one. Every dollar you invest, they're putting an extra 26 on top for you. So that's good to hear. The 52-week range from $208 to $280 the price, and it's at the higher range of that at the moment. It could have gone past that in the time of recording. The 1 year percentage, 20%, so it's gone up 20%. And over the last 5 years, 95%, so nice 20% pretty much. 19% if I'm going to be exact, 19% each year, you are getting value for money. Absolutely has been a great stock to have over the last 5 years. Not brilliant, but nice and safe. beating the market. Beautiful. Not blowing it away, but definitely a nice solid company to continue to look at to maybe invest in. So, is Visa a good company to invest into? Should we be investing? What are the pitfalls? What are the dangers here? Well, I personally don't see much dangers right here, right now, unless we're going to go into something new out of this world. Cash is gone. Maybe if there's no swipe anymore, you don't even need to use your phone. It's going to go into the Apple phone, into the Apple Vision Pro, something like that, where you just do all your payments off there altogether, don't even need the phone anymore. That's the danger, I suppose, if you're looking at, if you don't need the physical card anymore, and other merchants like Apple would just take over the pay altogether without using Visa, then that's the danger. I suppose that is, if you want something out of this world, that is the danger, that cards are no longer existed. Just like coins, they once said that coins were not going to disappear altogether, whether it's a potential this is going to happen. And if that happens, then cards could be next. So nothing is impossible in this world. Let's have a look at Visa, apart from maybe pigs flying. But intrinsic value, yes, what is the intrinsic value of Visa right here, right now? Is it worth a buy or is it overpriced? Up to you to decide. So what I do is use the trade brands, grams calculator. It's very basic. It looks at current share price, earnings per share, the growth rate, the bond yield, and you finish with a potential intrinsic value. Very simple calculator. Do not take it as a gospel. Do your own research before you invest into any stock. But let's just have a look at this intrinsic value of Visa. So we're just going to say, at time of recording, $270 the price of Visa, around $9.99 earnings per share, and a 5% growth rate. You're looking at $191, so you're overvalued. But that is not the current rate, so that's good. At 10% with the same metrics, you're looking at $294. So just undervalued currently. But if you're adding the dividends in, which I've always say with these videos, you got to, when there's a dividend play, you drop down the price of that intrinsic value because they're already paying you that out. If you think the earnings per share is going to jump to 15, let's stay at the 10% growth rate, which they've been doing better than that lately. $445. Wowza. If you're thinking the earnings per share can go to 20 and the 15% growth rate, you're looking at $802. So is Visa absolute steal deal? Potentially. Potentially a steal deal, but this company hasn't proved that it's going to go flying to the moon unless there's some sort of metabolic rise in the revenue and their profit. That is everything else looks pretty nice. Could get their long-term debt down. Potentially they got the free cash flow to pay that off. They could at least pay half of it off right here, right now. That's what I'll do. Outside of investing into the business more. But yes, probably one of the bigger plays for Visa. Are they too big though? I think they probably are all too big. But if there was any chance they could buy out MasterCard or American Express, then they can have a monopoly on the business. But again, they probably might not get past government. But that's the potential if they can find new ways to take over. Maybe PayPal, for instance, before PayPal goes to the moon, maybe Visa can buy them out there and get more involved. So that's potential. If you're looking for something for the company to do to really, even in if they go into the space of crypto and buy out some of these companies before they get too big, potential for Visa. Just get rid of the competition, baby. That's how you make the winning game. Look at Facebook, prime example. Yes, to me, if I'm looking at intrinsic value for Visa, for me, I'm going to say 10% growth rate, even though they've been doing better than that. I don't see that going forward. There's going to be big things, so 10% to me. So fairly valued right now, and this is going into the future. I expect the stock price to continue to go up, and it'll probably go higher than what my thing. But if I wanted to be safe and want to have made double more money, it's got to go to 150. Yeah. Right here, right now, Visa would not be an investment for me. It'd have to get 150 for me to be worthwhile. I like to invest in stocks that I can see at least 100%. Obviously, you're looking for that 1,000% and all that, but at the end of the day, if you can double your money in anything, it's just the start. Anything cream on top of that, beautiful. And then you can start thinking, do I need to reinvest somewhere else? That's the art of investing, folks. They're not going to tell you all this art in investing. They just say buy and hold forever. It's a whole lot of hoopla. It's good for a little while. So you buy it and hold into Apple for the last 5 years. You've been stuck, not going far at all as a stock price in Apple. That's just an example. You can keep your money there, but you've got to start reinvesting into something with a better deal going forward. That's what the art of investing is. That's how the rich get rich. They move their money around to better opportunities. That doesn't mean just get out of one stock altogether unless it's going completely bust. But take some of your profits and find somewhere where you're going to see another double up somewhere, potentially in a quicker amount of time than sticking with a staple stock. You can stick to a staple stock and just invest one time, boom, 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 when it drops, and just leave it and let it grow. But then the affordability of being able to put more money into, say, a Meta, for example, right now, you need quite a bit of money to do that. But anyway, that's Barry Charles. That's another video here on the channel. Remember to like and subscribe, and have a great day out there.